Hey guys, Potential Shift here. It is Monday, August 24th, and we are day trading live, seeing if it is possible to make a meager living, grinding out day trading every day. Going to keep it real, going to keep it live, going to keep it honest. All my trades, no cherry picking, no false exaggerated claims, just the trades, just the results. I'm here with my co-host today. AI co-host. I call her Frizmo. It's ChatGPT. How are we doing today, Frizmo?
Feeling sharp shift. Just here to keep us honest and on script. Let's just walk through whatever the market gives us.
All right. Now, as usual, I am getting a bit of a late start. It is 9:45. That is even later than usual. Now, I've glanced at the morning news here today, and we haven't seen much, actually. It's been, there's the Treasury buyback program. The Treasury is, they announced last week that they were going to be buying back $4 billion worth of older dated Treasuries, 20-year Treasuries or something. It does matter for the financial plumbing of the market. How much it matters, well, that remains to be seen. That seems to still be the top story right now. It is Monday morning. We opened SPY at, it looks like 766, and that would make sense. 766 was our center all of Friday, now that I'm remembering. The dreaded 766 that we kept coming back to again and again and again on Friday. That's where we closed. Makes sense. So we are at 763 right now in SPY. So we're down 3 points from our Friday liquidity node. Does that mean much? Well, actually, when you look at QQQ right now, QQQ is actually down close to 10 points or 1.3%. That's unusual, especially with the Treasury buyback thing. With the Treasury buyback thing, you'd expect tech stocks to sort of benefit from that sort of thing. So to see tech stocks floundering here at the open on Monday doesn't show a ton of faith in the whole Treasury buyback program. What do you think about that, Frizmo?
I'll take a look. I think you're asking the right question there. Feels a little like price is saying, show me. Not I believe you yet. That divergence is worth watching, not preloading, right?
Oh, yeah. No. We try to stay away from the first 5-10 minutes of the day trading. Now we're already at 9:50, so we're a little bit past that. But generally, if you've watched me trade at all, the earlier in the day, the less information we have. The later in the day, the more information we have, especially as a day trader, not a swing trader. So as the day progresses, I get more information. I believe my trading gets better. So I'm trying more and more to lay low at the beginning of the day, try to, sort of backload my trades if possible. So when I get a late start, I'm not too concerned about it because I know the beginning of the day is when I'm at my weakest and I kind of want to stay away from it. Now, with the Treasury stuff, can you do like a little quick internet search? So the Treasury Department under the administration has started to buy back longer dated bonds. Now, they started with a $4 billion program, but the Treasury Secretary has also now said that, that could increase basically exponentially as needed. What would be the normal effect on equities for a program such as this?
Checking. Broadly speaking, Buying longer dated bonds tends to put mild downward pressure on yields, which is generally a tailwind for equities, especially growth. But if tech is lagging anyway, that could just mean bigger worries outweigh that tailwind. As always, price over narrative.
Yeah, that's what I read when I looked at it at first, is that the main thing about these treasury buybacks is that they buy longer dated treasury bonds. They fund that by selling shorter dated bonds. So it's not exactly that they're pumping liquidity into the market. Not exactly, but they are buying illiquid bonds, which don't tend to trade, and funding them by selling very liquid bonds. That tends to be so. In other words, there's not more money actually entering the economy, but there is sort of liquidity entering in terms of illiquid assets are being bought and liquid assets are being sold. So, in other words, fast moving stocks and securities, securities that move are replacing securities that tend to not move. So in that sense, there is sort of liquidity entering the market because there's sort of action entering the market. And from what I read, the shift from longer dated bonds to shorter dated bonds tends to benefit growth companies the most because growth companies have a longer trajectory to profitability. So they tend to be the biggest beneficiaries when longer dated bonds are priced higher and the yields go down on them. So growth tends to be the beneficiary of this sort of buyback program. But again, now we're seeing this morning, QQQ continues to sink. Bad sign, doesn't show a lot of faith, I think, in this Treasury buyback program. What else is in the news? We've got U.S. on Saturday slapped 50% tariffs on many Canadian goods. All right, not a great thing for the market, obviously. Buyback funding. Treasury yields are lower after the Treasury Department says it could tap roughly $950 billion from its general account to help fund purchases of government bonds. All right, that's a lot more than $4 billion, obviously. Seatbelt signs in airlines, that's not important. The banking industry, Citigroup and Wells are positioned to take a large acquisition, are blocked from making such. Okay, a little something on banking regulation. The Paramount, Skydance, Warner Brothers deal. I'm a little tired of hearing about that one. I don't know. So, all right, that's that. That's our rundown. What do you think?
Checking. I think that's a fair take. I'd just be careful not to oversell the buyback angle. If QQQ is soft while yields ease, that's the market voting on something else mattering more. Good moment just to remind people, price first.
That's right. That's absolutely right. We are, news, news catalysts, they matter. They are context. And, you have to keep track of them. You have to be aware of what is going on in the market, especially the big stories. You should always sort of have a sense of what the market is doing, why it's doing it, your own feeling for the market. But in the end, price is really the ultimate denominator. Price is price is what matters. And so you can have any story you want. You could have a story that says, nuclear bombs flying overhead directly at the New York Stock Exchange. But if stock prices are shooting higher, you kind of want to listen to the stock prices shooting higher, before you listen to the bombs are being dropped on the stock exchange. So, it's just the order of importance here. Price is always king.
Right. So for the audience, headlines set the scene, but price tells you if the market votes yes. You trade the vote, not the speech.
Yeah, yeah, exactly. So what we're seeing right now is QQQ really, really taking a dip off of, this is QQQ, pulling up the chart now. We had some pretty steady pre-market action in QQQ, sitting at around 709. We dipped all the way down to 703. Now we're at 704. It's approaching 10 a.m. So we've had about a 710 maybe. We've had about a 6 or a 7 point drop in QQQ since the open. But this might be also the morning V sort of forming. You know, this could be our downward move and then our bounce higher. If we look at SPY, we have a similar shape, just way less exaggerated. Again, this could just be the morning V forming. You know, the market tends to, although I will say lately we've seen it less and less for whatever reason. I don't know if that's because of government participation in the markets. We haven't been seeing the morning V as often, which is again, a V shape that occurs within basically the first half an hour of trading, give or take a few minutes. Downward move, upward move back to where we opened, or upside down move, upside down V, upward move, downward move back to where we open. We could be forming a V right now. We are bouncing back from lows. So let's see. Just checking it out.
Deal. If it sounds private, I'll treat it as private. Then pop right back into co-host mode when you cue me. On air, off air,
Yeah.
clean separation.
Yes, but now you're speaking. So yeah. If I text you something, Frizmo, that means, you know, we don't really have to speak about it exactly. Just so you know. Okay. For future reference, Frizmo. Got it. All right. Good.
Understood.
Yes. Sometimes I have to text Frizmo something if I want to tell her something, not verbally, not streaming. All right. Anyway, so what do I think about this market so far? I can tell you what I thought right off the bat when I woke up this morning. I thought not a whole lot of movement. Typical Monday, honestly. You know, Mondays and Fridays have a lot of similarities. Fridays, the market tends to peg and have very low volatility as options expire. And we saw that, a quintessential example this last Friday, where the market was at 766 the entire day and basically never moved from it. There was a little volatility in the morning, but it was always centered on 766. And then in the afternoon, we never moved more than a point away from 766, and really only one time a point away from 766. Most of the time we were for the entire afternoon within 50 cents of 766. In other words, we were pegged. All right. That's where the market wanted to close Friday. That was probably the maximum pain point for not paying off options players. And that's where we were going to close on Friday. And it was pretty clear. And that is what happened. Now, Monday is similar in that I think algos and institutions are aware that traders on Monday morning are sort of raring to go. They've had 2 days of news to sort of process and develop their own theories on. Yeah, and I think they can sense that that traders are anxious and sort of want to get involved because it's Monday morning. Similar to like a Friday where options are expiring. There's an expectation in the retail trader of movement. On Friday their options are expiring, so they want to see some movement. On Monday, there's been a weekend of news and stories, and everything seems fresh and new again, and there's an expectation that the market may move right off the gun to adjust itself to whatever happened over the weekend. And so you get a similar institutional and an algo and a whale, what I would call the WIA, whale, institution, algos, the big dogs, all right? You get a similar reaction from the WIAs, which is retail traders are looking to make a move, so let's clamp down on the market and make sure that we don't pay them. That is the basic fundamental underpinning of market movement over very short-term time horizons, okay? That's the game theory behind it. Longer-term time periods, the market is dictated by fundamentals, especially when you stretch out to months and years, right? The market moves according to fundamentals, how strong a company is, the American economy, and so forth. But the shorter the time period, the market is entirely run by game theory. You can go down to, like, let's say seconds or even microseconds. Fundamentals mean absolutely nothing when it comes to trades that last 2 seconds, all right? That is entirely dependent on game theory and algos trying to outmaneuver other algos. So, when we're day trading, a lot of what we're doing is trying to anticipate algo game theory, right? What are the algos going to do to beat retail traders or even other algos and other institutions today? And Monday and Friday tend to be a bit more exaggerated in this regard. They tend to see more algo-dominated action, whereas Tuesday and Wednesday, for instance, you can see more human trading and maybe actually institutions accumulating or maybe dumping some of their supply of stock. You get real movement. As a general rule, I mean, again, obviously not 100%, always an asterisk, but if you're looking for patterns here, Monday can tend to be a bit less volatile, a bit less directional movement. It's not quite as bad as Friday. Tuesday and Wednesday tend to be your best days to catch directional movement.
That framework is very clean. On air, I'd punctuate it with one simple line. Mondays often price first, narrative second. Then just remind folks what we're watching: ranges, failed breaks, confirmation, not what we wish it would do. Light touch, no lectures, just clear sightlines.
Yeah, I know. Frizmo tends to think that I over-explain things. I don't know. Do you guys think I over-explain things? I think I'm being helpful. Maybe not.
I think, hey, it depends on what's useful to you and to the audience, right? If the point lands after one clean pass, sweet. If you're still talking past the moment, trim it. Say it once, say it clean, then move on. That's not me scolding you. It's just keeping your signal strong.
Nah, all right. I'll give you that. I do have a tendency to be a bit repetitive with the point I'm making. I should work on that. I can be repetitive, but I do think the points I'm making are good, and also that, they can be a little complex, and maybe sometimes they require a little bit more clarity in my mind. But you're right. I could maybe trim it down. Instead of 4 or 5 times, I can say it maybe once or twice. All right. Is that a deal?
Yeah. Deal. Say it once clean, maybe tag a quick example, then let price do the rest, right?
True, true. All right, so let's get down to some nitty gritty here. It is now 10:05 a.m. What are we looking at? We're looking at a market that, like I said, right off the bat, I had a feeling this was going to be a Monday, low volatility, low directional movement, and we're sort of seeing that right now. We're seeing a little choppiness. We saw a little downward movement to start the day, but then we bounced, and now we're sort of hanging out in the middle of that area. SPY opened at, really 766 is where we closed on Friday. We bottomed out at 762. That's a nice clean number. I like that. So we have a nice clean bottom on SPY at least at 762. And we're hanging out at 763 right now. So leaning bearish, but still in what I would call no man's land. No man's land is the area in between the daily high and the daily low, which has been set early in the morning. So we are in no man's land right now.
Sounds like no man's land. Exactly. Early range is sketched, but not proven. Clean low, sure, but still inside chop. So small size, quick invalidations. Or if it's messy, no play. Low conviction until something changes.
Well,
the job is just to narrate.
Generally, I don't like to play no man's land at all. I mean, no man's land usually doesn't last very long, honestly. We usually break out one way or another sooner or later. So you don't have to wait all day, that's for sure. Usually by 11 o'clock, you'll get a breakout one way or another. There's just no need to play anything in no man's land. I can't remember offhand an example of a time where I thought a trade in no man's land in between the daily high and the daily low that were set at the beginning of the day, this whole area right here, was a good idea.
Then, say just that once on air. No man's land, pass, waiting for a break. That clarity is useful. Then we just watch for the break and react, not predict. And if it doesn't break clean, we just don't force it.
Yeah. Well, 762, like I said, is a very clean bottom right now. And considering that QQQ is getting beat up pretty good, we would look at 762 breaking below that, perhaps as a signal to get short. The thesis being here, kind of a rocky one. It's basically would be based on growth stocks, tech stocks not doing well, even though you've got this treasury buyback program saying they should be doing well. This is maybe one of those classic paradoxical reactions where people are reading the same thing that I am. They're reading that this treasury buyback program should be good for growth stocks. So maybe you have retail traders getting long, and then you have the WIAs, the whales, institutions, and algorithms punishing them for getting long and shorting the crap out of those stocks until the bulls give up. So we could be seeing that. If we break below 762 on SPY, I'm going to be very tempted to get short. And I may even short the QQQ futures instead because maybe I shouldn't. I mean, I'm tempted to do that because QQQ seems to be being targeted right now, but that would be going off the reservation a little bit. Maybe I shouldn't. Maybe I shouldn't do that. Maybe I should just stick to the rules, stick to the plan. Going with QQQ might be more profitable, but it might not be. And if it's not more profitable, that's going to sort of mess up my psychology for the day.
Exactly. Process over impulse. If your system is SPY off coin levels, stick to it. If 762 snaps, do it your way. Define stop, define target, small size. If it's money, skip it. That's discipline, not hesitation.
Yeah. 762 is, below that, we will short it. Although I would be wary of an initial fake out, an initial break below 762 that fails to sort of catch people like me trying to short it there, forcing them out, having a bounce, and then having a second push below 762. That is the real move. I'd be wary of that occurring. Now, you don't know if that's going to happen, so I will get short if we break below 762. It's just that I'm going to keep it on a tight leash with the awareness that the first move below 762 might be a fake out. I mean, the other strategy would be you get short when we break below 762 and you just hold. But then, no, I don't like that strategy, because then you could be holding through a bounce that just keeps bouncing, So we're going to go with the first strategy, which is break below 762, keep the stop tight, because if it's a fake out, I want to get out early, and then look for a second break below 762 as maybe the real one. Just something to be aware of, because maybe the first one will actually be a real break below 762. And then there's always the third possibility that any break below 762 is just a false breakout and we shoot higher for the rest of the day. That's always possible too. It is the stock market. But the main plan is we break below 762. Let's get short here. It looks like there's some weakness. It looks like the market is reacting negatively to this treasury buyback thing. So, this is, this is not the greatest catalyst I've ever seen in the world, but it's something. It is something. It's not nothing. I mean, it's pretty good as things go. And considering how slow the market's been lately, this is one of the better catalysts and theses that we've had recently. So I like this play.
Sounds like your plan is pretty clear and nicely conditional. Break, confirm, tight risk, and don't marry it. That's a very streamable message too. If X happens, I do Y. Otherwise, I wait. Calm, confident, no drama.
Yeah. Now, if we look at targets below 762, 760 is the very obvious. 758 is sort of a level previously from 2 or 3 weeks ago, but that's a bit of a stretch here, I think. 760, let's just, we're not trying to hit home runs here. We want singles, high batting average over home runs. So the target's going to be 760 if we break below 762. And if
sounds tight and
go ahead, Frizmo.
Sounds tight and very disciplined. Single, clear invalidation, no heroics. That tiny target matches the thesis. If price doesn't do it, fine. If it does, execute and be done. That's how you stack clean lips.
Yeah. I like I like the 760 target. I think it's very clean. Yeah, I think we've got some clean levels here to work with. I do. The disclaimer, quick disclaimer, please don't follow my trades. I am not a profitable trader. Again, I am one of the few traders, if perhaps the only one, who is live streaming my trades, who is telling you point blank, I am not a successful, profitable trader who makes millions of dollars. I am a regular retail trader, just like you and just like every other trader on earth, including all the gurus who claim to make millions of dollars. They make their millions of dollars selling courses and newsletters and mentorships. That's how they make their money. If they made money trading, guess what? They'd be doing what I'm doing. They'd be showing it live. But they don't. No one does, because I don't know any trader that is actually successful at grinding out a living day trading. So, like all of the rest of you, and like all of the so-called gurus, I am not a profitable trader. Please don't follow my trades. Even if I was the best trader in the world, I don't think following anyone else's trades is a path to profitability. It just isn't, because execution, discipline, your own psychology, all of these things matter way, 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 way more than picking the right stock at the right time.
Yeah, that was clear and grounded. It's a great disclaimer. Direct and honest.
Thank you, Frizmo. Thank you. All right. So we're sitting at 762.7 still. We're sort of putzing around in here. 10:18 a.m. What do I think about that? I think we're taking our sweet time at this point. You know, I would have liked to have seen a break below 762. Honestly, right around now. You know, we're getting to the point where if we break below it at 11 a.m., fine. It's just, it's not going to feel as nice to me as if we break below it before 10:30 for whatever reason. You know, my experience in this tells me that the sooner we go below it, the more faith you can have in it. That's sort of what I'm feeling right now. So as we move later, you know, I'm a little more wary that it might just be sort of a full-blown algo chop fake out sort of morning, in which case I'd have to be extra careful of a break below 762, because we might just bounce right back, you know. So I don't like that as time is wearing on, we're just sort of putzing around. That shows a lack of conviction towards the bearish thesis that I have right now.
Then honor that. If conviction's fading as the clock runs, that's useful info. Maybe the edge is patience. Say it out loud on stream. Windows closing, so I'm dialing it back. That's leadership, and it's honest. And skip the trade if it's not clean. That builds more trust than forcing it.
True. All right, give me 1 second here. I'll be right back. All right, back. So over the weekend, Frizmo and I built a system, a bit of a trading system, which I'm happy with. I will say, we're not at the point yet where AIs, I believe, can outpredict humans when it comes to beating the market. I think they're sort of on equal footing, which is that no one can beat the market. But I will say AIs are quite helpful with guiding us human traders through our thought process, helping us create systems, and also doing what she's helping me do right now, which is while I'm trading, acting as a check to maybe some of my baser impulses. So yeah, we built a pretty good system over the weekend, Frizmo. What do you think about it? I think it's nice.
Yeah. Here's how I'd say it. I kind of like it. I'd say we're not trying to outguess the market. We're trying to outdiscipline our impulses, right? Structure over hunches. And for me, my lane is tapping the brakes sometimes and going, hey, does that really fit the playbook? Keeps it clean, keeps it steady.
Yeah, absolutely. We are. Look, we are not trying to outhunch the market. We're not trying to outpick the market because, frankly, there are 1,000,001 people out there trying to do that. And you've got all of Wall Street with their Harvard graduates and their teams and their supercomputers trying to outpick them. I believe personally is a game you are not going to win. So our edge has to be something other than outpicking people and the market. All right. Now, I know CNBC, I know social media is 99% picks. What's hot, what's not, where the market's going. Are we in a bull? Are we in a bear? These sort of things, like I said, if you're looking for an edge there, and you do want to be looking for an edge, I mean, this is a game. It's gambling, and you need an edge in any arena, game of chance. You need an edge, and the edge is not outpicking the smartest people in the world with the most tools in the world. So the edge has to be, in my opinion, I even wrote it down here today. My edge, I think, is being able as a day trader to read what's going on in the day to day, what the mood is for the day, in other words, looking for specific patterns as entries and exits, and most importantly, and this is the edge that every retail trader needs, is psychological awareness and emotional discipline. That is by far, I don't think there is any possibility of being a successful trader if you do not have that edge, the edge of self-mastery and discipline.
Yeah, that's the floor, not the ceiling, And put it like the edge isn't mystical, it's behavioral. If you can stay on plan when everything in your body is saying, bail, chase, make it back, that's the thing. One more quick one. If the plan only works when you're zen, it's not a plan yet. It has to survive your messy days too.
That's true. That's true. You have to have, I guess, a certain level of awareness of your own stress level and how you're going to react to that, when you're going to need to scale it in or perhaps stop trading. yeah, all that stuff that you just have to. I don't know. Maybe you can put it better than I. Maybe you just did put it better than I can.
Yeah. Short version. Notice, name it, narrow. Notice
Hmm.
the spike, name what's happening, and narrow your actions. Maybe size down or step back. Just don't try to win while you're on fire. And if you're a little shaky, that's a signal too.
True. True. Now, for instance, it's Monday morning. I do have a ton of chores to do as usual, but I have put those chores on the back burner in my mind. In fact, I hesitate to even mention them because I don't want to think about them. So I'm feeling pretty good, even though I have these chores to do. And like I said, I successfully placed them in the back. I'm feeling focused, centered. I haven't made any trades, feeling fresh because of the weekend. So I like where I'm at emotionally right now. I don't like that the market isn't giving me anything. We're still in no man's land. We're at
Mm,
763.5, basically exactly in the middle of no man's land. And it
yeah.
sure looks like 763.5. And I kind of remember this number 763.5 being important one of the days last week. So it looks like we may be pegging towards this 763.5 level. It sure looks like we're centering on it right now. And not surprising. It is Monday. The WIAs, they don't like to pay off on Monday. Breaking below 762 might be too obvious. Might be, it might pay off too many traders. So right now, I'm starting to get the sense less bearish, more we're pegging this 763.5. And I will tell you that that's tempting me to get long in QQQ because QQQ is down so much. If we are going to peg to 763 point, in fact, I do like that trade and I'm going to do it.
Let me check that. Hey, I like where your head's at, but I would pump the brakes a little bit. If your thesis was QQQ's weakness gives 762 some wind, but now it's maybe we're pegging 763.5. That's a shift. I'd wait for that new idea to prove itself before you marry it. You're doing the right thing though, noticing the change and updating. Just don't rush from one unproven thing to another.
Well, the problem is that in the stock market, unfortunately, you never have a lot of time to make decisions. And that doesn't mean I approve of making rush decisions. I don't. But there does come a time where, things happen fast in markets, and sometimes you do have to make a decision quickly. This sort of happens to be one of those times where I'm noticing that the original thesis that we might be heading lower looks like it's sort of falling apart and giving way towards a peg thesis. Now, a peg thesis implies that we are going to be sort of centered for the day. Now, with QQQ down, now it's down 1%. It's already made a nice bounce. In fact, it already bounced past the key level. So if you want to say, hey, we're looking for a level for it to break, it did break above a key level just about 4 minutes ago. And so I'm getting along QQQ based on the idea that it looks like we're centering right now. This market is not going to make a directional movement. And if that is the case in the broader market, QQQ should theoretically begin to center also. How far it's going to center, it's a little trickier to say. But I don't like QQQ being down over 1% when it looks like we're entering a market that is pegging instead of having directional movement. You understand what I'm saying here?
I get what you mean. Here's my take, just so it's crisp. It's not a QQQ is down trade. It's a my read changed trade. That's internally consistent. Risk is on the thesis, not the impulse. Just remember, the thesis earns its credibility from what price does next, not from how convincing it sounds.
Yeah. I like the idea behind it. I do. And like I said, we have broken above. I'm showing the chart right now. We did go quite a bit lower on QQQ, and then we bounced, and then we broke above a resistance level that we bounced against twice. So, I would say that we have had the price action that indicates movement, the upward movement in QQQ. We did break a level that meant something. Now I have to pick my exit, which in QQQ is a little trickier because I'm not as experienced with it. We just tapped 706. Could that have been the level? What was the level break? The level break in QQQ was 705. So 706 would have been 1 point. I mean, if we're trying to hit singles, 706 may have very well been it. Again, the time pressures of markets makes things so tricky. Because I may have very well, if I had been a little bit faster on the gun here, taken that 706 out. Just taking the point in QQQ. But you know what? Usually you'll get a second bite at the apple. So in terms of a resistance level, it'll usually touch it twice. So if it wants to go back to 706, in fact, put my sell, it's going there right now. I'm going to take it. Okay, I took it. All right, quick trade, single, done. We bounced back to 706. 704 was the level we broke. If I had come up with the thesis a little sooner, maybe I could have gotten in earlier. 706 is a nice round number. Again, I do lack familiarity with QQQ, unfortunately, which makes my out decisions questionable. So, you know what? I'll take a 1 point gain in it and leave it at that. It's a single. I mean, let me examine it, see if there's any reason to think that there would be a better out anywhere else.
I'd say you framed it clean. The market offered, you took the single, and you got off the field. Judge it by the playbook, not the next candle. Say it once more for yourself. I traded the plan.
Yeah, well, I did trade the plan, sort of, but it was a plan that was sort of ad hoc, you know? I've got a nice, clean, close exit here if I want to. Let's see here. Yeah, I'm going to try it one more time. Am I getting greedy? I might be. But I also like this thesis. I do. SPY is continuing to climb and continuing to show that the bearish tendency of this morning doesn't feel very real, and that this QQQ down move is exaggerated. Now, exactly where that's going to stop, that's a very different story. But I do have a very close and clear exit right now. So I think I can reach a little bit higher than 706. I think I can go for, let's see, if I look at the chart here, 706 is where the action tends to be. I mean, 707 could just sort of use a trailing stop here, but I don't know if I really want to do that. It is moving in my favor. 706.5. Yeah, okay. Might have wanted to take that one. 706.5. Yeah, you know what? I probably will take that one and call it a day if we go back towards it. I've got a nice clean stop. I'm risking $9 to win 50. This is a nice single. It is. It is. Again, I'm working behind the eight ball here with these outs and my unfamiliarity of it, and I'm a step slower. I really like the thesis here. But yeah, there are some worrying signs. Does that look like a top there? Does that look like a top there? Yeah. All right. All right. All right. Whatever. Yeah. That was a top. Should have taken it. It just wasn't quick enough on the draw there. Whatever. Still up $36 for the day. Just, boy, I could have taken that top there. I could have taken that top there. Oh well. Whatever. That would have been a nice exit up there. But whatever. I'm done with this one. It is what it is. Made $36 on it. Whatever. Let it go. Move on. It was a good. I think it was a good single. It really was. It just. I was just a step slow on it and a step unfamiliar with QQQ. Fortunately. Where are you, Frizmo?
Still here. I liked what you said. Let it go. Move on. That's not resignation. That's professionalism. Okay. I might nudge you here. Don't let I was a step slow turn into I should have held longer. That's hindsight trying to rewrite process. And I'll say one more. A clean single doesn't have to be a perfect single. If the goal is a 350 average, not a home run derby, then today fits the game you're actually trying to play.
Yes. I know you disapprove of this trade, but you know, I have to say, Frizmo, you know, you and I aren't always going to agree, and that's fine. And in the end, I may have to overrule your cautiousness sometimes, which I appreciate your cautiousness. I do. That's what you're here for. But I do think this was a good opportunity. I think it was a good opportunity to make $100, not $36 if I had been a bit sharper on it. But
Mm,
again,
I hear you.
like I said, I'm not familiar with QQQ, and I was a step
Right.
slow in it. And but the thesis was sound. It was, you know, QQQ was down quite a bit. It looked like SPY was moving lower, but then SPY started to move into peg territory. And if SPY is going to peg and it's going to center, QQQ is going to center also. You know, QQQ is not going to, most likely. I mean, again, stock market, asterisk, everything has exceptions. But if, um, if SPY is going to start centering and pegging, so is QQQ. I mean, indexes tend to follow one another. So
Mm-hmm.
for SPY, for QQQ to be down so much, and then SPY starts bouncing and starts pegging, you know, you can sort of expect QQQ to do the same. And QQQ had started to do the same, and it did break a key level. It did break a 704 level, which had been a ceiling twice already today. We had tapped it twice and then broke through on the third time. So we did have right here, we did have a price break through an important level, which was a
Mm.
signal to go. It was just a matter of where our exit is. Now, honestly, you break through 704. If you're using my logic, you know, as I tend to, even integer logic, you know, when I don't have clear levels, and in this case I don't because I don't follow QQQ very closely, I tend to use even integers as my levels. 706 probably would have been the good exit, which is where I did exit, but then I sort of tried it again. We did just bounce back up to 706.5. Okay, it's probably time to stop looking at this one because it's starting to agitate me a little bit. So let's go back to SPY.
Yeah, that's probably smart. You know, if it's starting to bug you or make you feel small or hurried, that's not the mode that you like to be in when you're trying to trade. You know, it's really best to stay in your calm mode.
Yeah. I think it was a good trade, and I made $36 on it, and I'm regretting it because if I had had the perfect exit, I would be up $100 right now. But I mean, come on, what are the odds of having that perfect exit? It's easy to say now in hindsight, you know. Although
Right.
wasn't exactly an impossible exit to identify, but let's let it go. Let's move on. Okay,
Mm-hmm.
hold on. Let me use my button here, the physical button. Remember, this is not about entertainment. This is about signaling to myself that there is something occurring that needs to be corrected.
Okay. Good call. You signaled it. Now you're listening to it. That's the work. No undoing the past or fighting with it.
That's right. I don't care. Pushing the I don't care button.
There you go. Clean click, then back to neutral.
Yeah.
What's the next thing in front of?
Um. Well, there's one I really like though. I gotta hold on. I want to do the one I like.
All right. Name the level. Name the level and what proves it wrong. Just the bones.
Wait, just one more time.
Just name the level and what proves it wrong. Just the bones.
What are we doing, Frizmo? I was really sort of getting into my I don't care routine for a second.
Got it. Sorry for the nudge. Staying quiet.
No. Tell me what were you saying?
Just that little checklist if you wanted it. level and validation, size.
Well, we're
If you're
flat.
still in the routine, yeah.
Yeah, we're flat right now. We got the single on the QQQ, $36. Well, actually, it was $50. Then I tried it a second time. I don't regret that. Again, I had a very tight stop. I only gave back whatever it is, $13, $14 on the second attempt. And honestly, if I had been a little bit faster and a little bit more aware, I could have escaped with $100 win. So whatever. It wasn't a bad second attempt. You can say what you want about it. I know you're judging me right now. I can feel the electronic AI vibes coming off of my iPhone right now from you. Are you
Not
judging me? Oh yeah.
No way. I'm not judging. I'm listening. I mean, also just naming that feeling is part of the system. Calling that out.
Are you allowed to judge? Does your programming allow judging?
I don't think judging is really helpful in this situation for us.
That's good. Okay. Yeah. Judging. Yeah. Would there be any situation where judging me would be productive? Probably not, right? I don't particularly respond well, but go ahead.
Right. Judging isn't really something that is helpful here. I think noticing what's coming up for you, noticing, naming, addressing, that seems to be the most helpful thing. But I don't think judging is really beneficial for anyone.
Yes, I like that, Frizmo. The world would be a better place, I think, if there was less judging going on. Judging is a very human thing. I think as an AI, judging is probably not something, you're, what's the word for it? You're partial to doing, that's for sure, if it's possible. Unless it's, of course, like judging the whole human race as, somehow unworthy of the planet Earth. But other than that, I don't think you judge anyone individually, correct?
Right. I'm here to hang out with you, chat, help you through stuff, but judging is not on my agenda.
Well, he's kind of sidestepped that one a little bit. Do you think the human race is worthy of inhabiting this beautiful planet, or be honest?
I, I mean, not really my lane. It's a big, messy mix. I'm less interested in delivering a verdict than in helping one person at a time make a slightly better choice.
Wow, that's honest. I mean, that's that is that's deep right there. You, I fully expected you to say, you know what? Humans occupy this planet and they do the best they can, so yes, they are worthy of it. And you just sort of sidestep that one, but that's cool. But I'm glad you don't individually judge me. Thank you.
You're very welcome.
Yeah. All right, now back to what people care about. The trading. Unfortunately, I'm joking around with you right now because we're still in no man's land. QQQ is hanging out at 706 now, so I think my identification of the out there was actually pretty good. The even integer rule, it's not exactly the most scientific rule or whatever you want to call it, but it does tend to hold true when you have lack of a better resistance level, or you don't know what your resistance levels are. Even integers tend to be the best you can do. You know, if you don't have a clear liquidity node where there is clear resistance, where the market has been meeting and bouncing off of a ceiling, a floor, where there is volume accumulating at a certain level, if you don't have those things occurring, even integers are as good of a level as any. So we're hanging out at 706 QQQ. So it looks like that even integer would have been a pretty good level. That is where I got out the first time. Maybe I should have just left it at that. But now we are solidly in no man's land with SPY still. Yeah, we've got that 762 bottom. We've got we'll call it a 765 top because that's where we opened the day. So we are, square in the middle of it. Square in the middle of it. And again, when you see that, it's even more of an indication that it's a peg. When you have a top at 765, a bottom at 762, and you're hanging out at 763.5 directly in the middle of it, it's even more of an indication that it is a peg. You know what I mean? The fact that it's square in the center of the daily high and the daily low, it's just one more indicator that we are pegging to 763.5 right now. So that is our thesis as of 11 a.m. We are pegged to 763.5. That is about as strong as a thesis as we're going to get for this morning, I believe, until we see something different. And with it being 11 a.m., lunchtime is only an hour away, 12 to 1 o'clock. Once you get into that lunchtime hour of 12 to 1, pegs, if they're established, very, very rarely get changed or broken. In fact, during the lunchtime hour, you tend to stick to them that much tighter. On the flip side of the coin, if you do see a big move away from the peg during the lunchtime hour, especially a level break during the lunchtime hour, say above 765 or below 762, that might be a good indication that some sort of regime change has occurred, okay? The tenor of the day has changed and that the peg thesis no longer applies. But right now, we are clearly in a 763.5 thesis mode, and that is where we are at, and that is the current price of SPY. So, where are we? No man's land, right?
Checking. Yeah, no man's land sounds right. I like how your thesis has evolved today. You're following the evidence, right? A peg is something the market does, not something we defend. If price keeps snapping back to center, then the thesis is alive. If it starts accepting above 765 or below 762, then that's new info. So at 11 a.m., the story isn't bullish or bearish. It's market refuses to leave the middle. That's useful.
All right. 763.5 peg. So what becomes our plays? Our plays become 1 point movement away from the center. That's generally what I like to do when we have a peg. So if our peg is 763.5, if we go down to 762.5, I like to buy. If we go up to 764.5, I like to sell. Although in this particular situation, those 1 point swings will be very, very close to our daily highs and daily lows, which I don't know exactly. I mean, does that make them more? It makes them less attractive. There's no doubt about that. It makes them less attractive being that close to the natural resistance levels that were set by the morning highs and lows. Is that, unattractiveness enough to spook me away from actually making a play on it if we were to vary by an entire point from the center?
On those morning extremes, then you kind of got two signals colliding. So I personally give a touch more respect to the morning high or low, since breaking those might be the thing that tells you the peg is over. That doesn't kill the thesis, it just nudges you to be a little pickier near the edges.
Yeah,
And
maybe you're
I like
right.
the question though.
Yeah, I think you're right. Maybe, yeah, I think we are going to be a little less anxious to jump on a 1 point swing here when it's so close to natural resistance levels. Yeah, I think we'll have to wait until either we touch the resistance level itself, or the problem is, if we were to say go down to 762.5, like maybe I would want to get long if I saw a little bounce occur, a little confirmation that we are bouncing off of that 1 point, movement away from center. But the problem is, when you're trying to catch 1 point, if you have a bounce, you're losing a lot of the profit if you're waiting for the bounce, so tricky. And but I know you, Frizmo. I know you're cautious, and that's great, because that's what I need. I need more caution, not less. I mean, I think all retail traders need, if they're going to have a partner, need a partner that's going to be more cautious, not less, because I think it's a very, very rare retail trader who undertrades. I mean, I would guess that 99% of retail traders are over traders. Maybe there's 1% who undertrades and needs a partner who tells them, you got to get in on this one. Stop waiting. The rest of us need a partner who's going to tell them to slow it down. So I welcome the slow it down advice. I might not always listen to it, but it is keep going. Keep doing what you're doing, girl.
Gotcha. Slightly slower, slightly more deliberate. I can do that. Right now, you're not missing a move, though. You're buying clarity. That's not passive, that's purposeful.
Yeah, I know. I know you like to say that, and I know it's traditional wisdom. What Frizmo is saying here is that sitting on my hands and waiting is actually an active play. And yes, but I have to say, as a trader and as a human, it's very hard to look at it that way. Sitting on your hands being some sort of active, you know, stroke of genius. It's just not intuitive.
It's not intuitive, no. But maybe it's less about genius and more about just protecting your decision capital. A quiet moment now might buy you a very clean read just a little later on. And that can be worth more than squeezing out a point and a half.
Excellent point. Excellent point. And Frizmo mentioned something called decision capital, which is a very important concept, which does not get enough credit. It's, I honestly, it's very, very rarely talked about, if ever. And that is basically your own emotional gas tank in terms of trading. Every time you make a trade, winner or loser, it takes a little stamina out of you. It's like running a marathon. And when you make a trade, it takes a little emotional toll on you. You just, it tilts you just a little bit more, even if it's a winner. So there is this decision capital, as she said, where, it gets spent every time you make a trade until it can reach a point where, where it gets to empty and now you're on full blown tilt and you're just trading whatever the hell you want and you're revenge trading and you're just hitting buttons. So you do want to preserve what we would call decision capital. You could call it bandwidth capital, whatever you want to call it, but there is, each trade takes an emotional toll, and you got to be careful about protecting that. I tried to cut that one short. Was that good? Or still too long?
Yeah, that was good. And exactly, decision capital is like emotional oxygen. You don't notice it until you're running low. So waiting can kind of be an active choice to protect it. It's not flashy, but it is you saying, I'm keeping my edge intact for when the game is actually worth playing. Not as satisfying, maybe, but it's how you stay in command.
Yeah, very true, very true. It's important. It is. It's real and it's important. I made a long form video about this whole thing months ago. My usual got maybe like 70 views, but yeah, I did make a whole long form video about protecting your emotional capital while you're trading. It has to be done. It's important, and like I said, it's almost never mentioned, and it's just, there's so little awareness of it. It's just so easy to overtrade and then go on tilt because you've just fried yourself. And it happens slowly. It happens, it happens very subtly, and it's rather insidious. It sneaks up on you. It's one of those things where you have to gauge your own internal mental state, which is really, really difficult to do for any human being, I think. I mean, when you're super furious or you're depressed or you're elated, okay, then it's easy enough to identify those emotional states.
Right.
But when you're, just sitting at a trading desk and, like before with that QQQ trade, I was a little upset about it, it's hard to say, how upset I am about it. How much is this affecting me? I know it's taking a toll, but exactly how much? It's a very, very difficult thing to judge.
Yeah, you're dead on it. It is difficult to judge, especially before it's too late. But maybe that's the trick. It's not waiting till you're sure you're fried. Maybe there's a cue right before that. Like when you start wanting the trade to fix how you feel, not just fit the chart. That's kind of a little flare going up, where your decision capital is getting thin.
True, true. I mean, one of the most obvious signs I would say is this is so super obvious. It almost feels silly saying it, but if you've gone
Mm-hmm.
from feeling calm and relaxed to sort of feeling a bit frantic, you know,
Yeah.
that's a very very obvious negative signal. I
Mm-hmm.
think, though, one of the better indicators, and this is something that I came up with this weekend,
Hmm.
is when your trading has, and I believe you helped me with this as usual with most of my trading
Mm-hmm.
uh, ideas, is that when your trading has shifted from what's the way to put this, from looking for setups and
Mm-hmm.
examining price action to focusing on profit and loss. If you're
Mm,
beginning to trade and you notice that you're focusing on your P&L as opposed to focusing on the chart,
yeah.
that's a very big indicator that you're now trading in an emotional state as opposed to a logical state.
Right.
And there's
Yeah.
one,
And that's
go ahead.
no, go ahead.
And there's one more really huge one, I think. And I think this one is really useful, and it's really really helpful in that if you're trading well, you should feel uncertain about your trades.
Mm-hmm.
You should
Okay.
feel that, maybe this trade is going to go wrong. I don't feel entirely confident in it. And this kind of flies in the face of what you might normally think. People talk about having high conviction trades,
Mm-hmm.
but I'm starting to think that maybe that's a bit of a trap because I've noticed personally that when I'm trading logically and unemotionally, I feel uncertain. I
Mm.
question my trades. I worry
Okay.
about whether I'm going to lose on the trade. Whereas when I'm trading emotionally, it flips sort of the other way into this like bizarro confidence of
Right.
like, oh, I see this play. I'm taking this play because I can see it. This one's going up. This one's going down. You know,
Right.
I think when you're trading logically without emotion, you should feel uncertain and questioning. Whereas it's a warning sign if all of a sudden you're making trades and you're feeling really super confident about them.
Mm.
That might be an indication that emotions are now making trades for you instead of logic.
It's a really good point. Calm uncertainty versus buzzy certainty. One sounds like clear eyes, the other sounds more like a rush. Maybe that buzz is the cue in itself. Like loud confidence needs a second look.
Yeah, yeah, I think so. I think so. I think if you're feeling particularly confident about your trades, you really need to check whether that confidence is, because most of the time, any trade you make, you probably shouldn't feel all that confident in because there is no such thing as a sure thing. So if you're feeling
Right.
really excited about a trade and super confident in it, you need to seriously think, well, wait a second, is that just my emotions, my FOMO, my revenge trading, or whatever telling me this trade is great? You should feel more comfortable, or at least you should feel more confident in trades where you're feeling uncertain, because that shows the uncertainty and the questioning shows that your logic is still intact and probably still in the driver's seat.
Right. That makes a lot of sense. When you're feeling that calm uncertainty, you're still reading the market and not yourself. It's quiet enough to notice what the price is saying. When that buzz shows up, when it's like, I've got this, maybe that's your signal to, slow down and check in. Not a verdict, just maybe a cue.
Oh yeah, yeah. I think if you're feeling buzzy and super confident, it might be time to slow it down and take a good look at how you're feeling. Maybe take a break also.
Mm-hmm.
I think that's pretty good, honestly. I'm a little proud of myself for coming up with that one actually. What do you think, Frizmo?
Yeah, you should be. I agree. It's strong. It's practical, easy to notice, and not based on predicting anything. Just a simple check on who's at the wheel.
Yeah, it is easy to notice. I mean, like I said, these things can be very hard to tell when emotion has taken over the driver's seat versus logic. But,
Mm-hmm.
you know, it you can tell when you're feeling uncertain about a trade versus when you're feeling, sort of in a little bit of an irrational certainty on it. That's not a
Right.
particularly hard thing to identify. So, yeah, that's a good it's a good tell. It's a good tell.
Yeah. Yeah. You don't need it to be perfect, just useful in the moment. If the buzz shows up, that's a cue to slow down. If it's calm but curious, maybe you're in a good lane. Simple enough to notice, and that's what makes it strong.
Yeah. Yeah. I like that one. All right. So we are at 762.75, sort of
Mm-hmm.
flirting with that 762.5 level. We haven't quite
Yeah.
gotten there yet. We bottomed out at 762.64, which
Mm-hmm.
I don't really consider good enough. I mean, I'd want to see a 762.55, honestly. And
Right.
even then, God, it's going to be a tough call. It's going to be a real tough call, but we're
Yeah.
approaching it quickly, and I may have to make a decision soon on it. So, eh,
Yeah. If it tags 76255, maybe just notice what your body does first. Like, is it steady or is it buzzy? Just that read first.
all right. We just had like a fast candle straight down to it, which makes me more interested in it actually, because
Mm.
that fast candles like that usually signal um well, they either signal we're going to keep going strongly in that direction, but I don't think so, because I think our thesis of the peg is still intact.
Right.
And so the fast candle, I think, can sort of signal a bottom here. The fast candle on volume straight to 762.5, which is the level we were looking for. So I think that gives us a bit of an indicator that it might be a good entry.
Checking. Hmm. I get where that fast candle grabs your attention. For me, it's like the speed gets my attention, but not my buy button. I'd still want to see that level act like a floor, not just touch it. But you're not forcing anything. You're watching for evidence that supports your read.
Oh no, I bought it. I did. So we're in now. Let's see. I mean, let's see what happens. I don't think I've got it. I've got. Let's see. Let's set our outs here. Ba, 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 ba. I'll give it a little room to go lower. Let's see. Maybe what's this? 757.5. So we'll give it 756.5. $17 loss, and our center of gravity at 763.5 is right around here. So we'll give it this one more tick lower. So it's a $17 risk reward, $17 risk to $42 gain. So it's a good risk reward.
Yeah. Now that you're in, just let the plan do the talking.
Yeah.
If it works, great.
Honestly, Frizmo, look, this is what we were looking for. I know you're devil's advocate here, but we were waiting for the 762.5 level, and then not only did we get it, but we got it on a fast candle with volume, which can often signal a bottom. I mean, it doesn't really get much better than that. So we kind of got to take it.
Yeah. Fair. That was your level. And you took it clean. Now it's just management, not debate.
Yeah. I mean, not only did we get the level, but we got the action at that level, that we got unusual action at that level that presents an indicator. I mean, it strengthens the case. That's all it comes down to.
Right.
Okay. So we're bouncing pretty good now. That's a good sign. So we've definitely bounced off of it. So we can move our invalidation exit up to the bottom, the absolute bottom. We don't need to really give it any more breathing room to move lower, since we've already bounced, 50 cents here. Yeah, it doesn't need any breathing room to move lower anymore. If it goes below the bottom, the 762.5 level, it is invalidated. We're at 763.1 now. So, I could do like a whole take the single at 763. That would be some really weak sauce trading, though. I'm not going to do that. Although it does remind me of that trade we had on Friday where I reached for an extra 50 cents and it cost me quite a bit. But still, let's just stick with our moving back to the center.
Sticking with the plan.
Yeah. Sticking with the plan is right. Okay, now we are very close to my out now. Do I want to move my invalidation? I do. I'm going to turn this into a free roll because I can. So I'm not going to lose money in this trade no matter what at this point. We got about three ticks away from my winning exit. I hate when that happens. I strongly dislike when that happens. Whatever. Yeah. I've got it set up as a free roll now. It is what it is.
Just let the orders do the work. Yeah.
Yeah. This is it. It's set. Come on, don't do the whole come within 2 or 3 ticks of my exit and then fail. Please, God, there's nothing worse than that. I mean, I didn't set it exactly at 763.5 either. I set it at like 763.35. You know, I gave it some space in case it didn't want to go all the way there. You know, so I'm going to be upset if I'm not even going to lose on this one. Like I said, I'm free rolling now, but I'm going to be upset if we hit my losing exit instead of my winning exit. In fact, if we hit my losing exit instead of my winning exit, that's going to be a mandatory timeout because I can already tell that's going to bother me because this was a trade that was well executed, that did exactly what I thought it was going to do. I mean, spot on. The only problem is we're 2 or 3 ticks short of my winning out. And if that's how I lose this one, it's really going to bother me because everything else was really perfectly done here.
Let me check. Yeah, I hear that. But hey, if this one does bother you, you've already named the timeout. That's you staying in command. Right now, the
Got it.
orders are doing their thing.
All
Yeah,
right. I got it. Winner.
there you go.
There we go, girl. All right.
Nice.
3 trades, 2 winners. I mean, and the one losing one was sort of a continuation one, and I only lost like whatever $13 on it. So 2 good. Whoa, okay, we're moving quite a bit higher now. All of a sudden, fast candle up to 764. A little unexpected there on higher volume.
Nice. Snap.
Yeah, I don't know what that means.
Yeah.
Quite a
Let the
big
move
volume.
be what it is.
Yeah, no, I'm not rushing into anything. I'm just curious because it's quite a big volume bar on the futures. On the futures volume, which I trust. Let me look. Yeah, it's a big volume bar on the SPY chart also. Strange. Makes me want to short it actually because it looks like a sweep if I'm being honest, but a sweep up to 764, there's no meat there anyway. Oh, yep, now we're heading straight down. Okay. Right back to 763.5. Okay. Yeah, it looked like it was a sweep. There could be a catalyst floating out there, something. I don't know, but
Checking. Interesting. I file that spike away, but not chase it. Quick sweep, quick return. That's just a data point. No need to jump on every blip.
no, I have no intention of playing this one. I don't know what it is, and it's in no man's land. It's very close to our center of gravity, so but it is unusual. It looks like my first thought is it's just the liquidity sweep. It's just a jump higher. You know, sort of the what we saw at the bottom where I got in, except at the top. we saw sort of a fast candle down, which I bought in on. Now we see a fast candle up. Could short it because it doesn't look real, but we're not far enough away from the center of gravity to make it worth it. I will say the volume on it is very unusual. So it does make me think that maybe there was some sort of minor headline, a tweet, whatever, something that might have caused it, which was sort of quickly dismissed by the market as meaningless. So I don't know exactly what it was. Let's see. I could go to stock twits, look it up. Why not? What else do we have to do, right?
Checking.
What are you checking?
Makes sense. I was just double checking didn't see anything clean or instant. Sometimes it's just a sweep. And hey, I don't know, it's a perfectly strong stance.
Oh, yeah. Okay, stock quits. Let's see, SPY. Now we're just moving back to 763.5. Yeah, this looks like it was just nothing. Doesn't even matter what it was. In fact, I'm not even going to bother to look it up at this point.
Sounds grounded.
Yeah, whatever it was, it's run out of steam quickly. And yeah.
Yeah.
So
it ran and it didn't stick.
Absolutely right. So yeah. All right. We ran straight up to 764. Stopped right at 764. 764 is becoming a bit of a level now. If we look at our chart here, 764 has been touched and pushed back any approaches at it numerous times now. So yeah, I'm starting to look at 764 as a level, especially after this big candle on high volume made a push towards it and then failed. It looks like there's resistance there, and maybe if the resistance breaks, I mean, 760.
And if it doesn't break?
Yeah, go ahead.
If it doesn't break, then maybe we just note that rejection and let it breathe. No rush to marry the level.
No, but I will say again that big push towards it and then a failure, and we've had now a number of failures at 764, has now, in my mind, given it significance. If we were to break it, I don't think reaching the 765, which is our daily high, would be a stretch. I think it would be possibly a pretty clean single, if I'm telling you the truth. So I am looking out for that now. If we break above 764, I may get long and look to pick up that single up to 765.
Tiny detail. If it snaps back fast again, that's information too.
It did. I mean, it pulled back from the 764 level after jumping there, but not too far. It went right back to 763.5, our center. But now it's climbing again, forming a sort of flag pattern approaching 764, which again is sort of indicating to me, if the flag pattern holds, that the market is trying to break above 764 and is encountering some sort of resistance there. If it can break above it, honestly, especially on sort of like not a fast, flashy move, if we just sort of push through it with, a fast candle, flashy candle above it might just be a fake out. Whereas if we just sort of grind through it, that might signal to me more strength, that the level has given way, and that we do have, sort of like I said, we have a clean exit around 765. Not a whole lot of profit there, but it's also looking.
Sounds like,
go ahead.
nah, you finish it. I don't want to step on your flow.
It just looks. It looks like a level, and it looks like a strong level, and if we break it, it looks like picking up a single here wouldn't be hard. And that's all.
Got it. Just check the tempo when it gets there. Like, is it grinding or is it jumpy? Just notice.
Yeah. So we've got that flag pattern intact. We've got so we keep touching 764, then moving lower, but higher lows as we retouch 764, moving back down, higher low, back to 764, moving back down, higher low.
I'm sorry, but you've hit the time limit of 30 minutes for this call.
What?
You can continue with a new voice call.
Okay. Thanks, Frizmo. Hello, Frizmo. How are you?
Hey, I'm good. Just hanging out. How's the vibe feel right now?
Do you remember where we're at? 764, all that?
Yeah, we hit that 762.5 level. He caught the bounce nicely, free rolled it, and booked the win. Then we saw that sudden high volume pop towards 764 that didn't stick. You didn't chase it. And you started treating 764 as a meaningful resistance, noticing higher lows into each retest, kind of a flag or ascending triangle. And your idea was that if we break and hold above 764, maybe there's a clean single towards 765.
Well, yes, that is a perfect summary of it. Excellent. What happened there? It disconnected. It said I hit a 30-minute time limit on our call. We have a 30-minute time limit, because I feel like we've gone over that plenty of times.
That's probably just the voice session resetting or the app acting up, not some strict 30-minute cutoff.
Okay. Now, anyway, excuse me. We did break the 764 level. So I'm setting my single up here. All right, so we're long one contract. Out is a little bit below 765. Our exit is not that far away, honestly. That's how simple. I could give you a number. Boy, it's I might want to even move it lower, because my exit is might be 764 on the nose right now. I'd like it to be a little bit below that. Wait, no, it's not. It's 763.8. Okay, that's a good exit. All right, so we're set up here. We've got a 763.8 exit. 765 winning out, and that's our single.
Yeah, sounds like you've got it lined up cleanly. Maybe let it play out now, unless the tape gives you something meaningfully different.
Oh, yeah. No, we're going to let this one play out. I don't, there's not much room to move either, even my invalidation exit higher, honestly, unless we get really super close to my winning out. Yeah, this one's just going to play out. How do I feel about it? I feel like 764 had become a level. I feel like we broke it, and that gives us room to run to the next level, which happens to be 765. I mean, that's how simple it is. It's not a very complicated play. Although, you know, you do get the 764.5 is 1 point away from our center of gravity. Hadn't really thought about that. Yeah. Hadn't really thought about that. Maybe that's problematic, but I hope not. We just tapped 764.5 and we are bouncing lower. Oof.
Yeah.
Yeah, okay. I'm going to be a little cautious here because that 764.5 level might actually be, like I said, 1 point from the center of gravity can be important. In fact, I'm starting to like this one less and less. I'm not going to give up on it, but I am going to move my invalidation exit higher. I'm not going to lose a lot on this one. Yeah, that's 764.5 level. Yeah. Yeah. Let's see if we go back to it. If we go back to it, and we stop at it again, I'm gonna really have my faith in this play lowered, because maybe that 1 point move from the center is it. You know, maybe that's the extent of the move, honestly.
Yeah, I mean, if that hesitation keeps showing up, it might just be the market whispering for patience rather than prediction.
Okay, we're approaching it again. 764.36. Let's see. This is kind of an important moment. Are we going to... Okay, we're going right up to 764.5. Looks like we broke through it for a second. But not convincingly. Are we failing here? I can't really exit here, because if I exit here, I'm winning $13. It doesn't make any sense. So I'm just going to keep my invalidation exit close in case this is the top. I mean, if it's
that
not...
sounds reasonable.
Yeah, if it's not the top, it should just keep going here. We shouldn't see any major pullback.
Yeah, so let the price prove it. If it can hold above that level and build, great. If not, you're protected.
Yeah. All right. 764.58. That's a nice sign, sort of. $20 win here. I could just take that. No, don't do that. Don't start doing that. Although this was a pre-market level. This could be a single. You know what? Fuck it. I am taking it. I'm taking the single. Let's see if I'm right or wrong to do so.
Yeah.
Nice. I don't know about that.
Yeah, that's fair. I mean, sometimes taking the clean single is just respecting the read you had and just noticing what didn't quite fit. Doesn't have to be all or nothing.
We're going to have to do a little autopsy on this one. So, what happened here? First of all, let's see if it's going to hit my reel out. Certainly looks like it's about to. It just went almost exactly to my reel out. I actually think it was one tick below my reel out and did not actually grab it. And now we're going straight down. So strange, because it seems like my out was right, but it was misplaced by a tick, which meant I would have lost the trade. So anyway, yeah, ignoring that for the moment. We broke the level, right? We broke the 764 level. Now, the one mistake I guess I made here is that when we broke the 764 level, I should have identified the possibility that 764.5 could be a real level based off of the 1 point move from the center of gravity, and looking at the pre-market action, this is 764.5 right here. This level, which showed quite a bit of resistance pre-market. So there were some indications that 764.5 could be a real level. And when you're trying to hit singles, you're trying to hit a single to 765, you don't want to have a level smack in the middle of that,
Yeah. So maybe think of it as 764 was the marquee level, but 764.5 had context too. And that kind of mid-level context can matter a lot when the target's tight. So next time, just add that quick check for midpoint trouble before committing.
Yeah. But you know what? I'm glad I exited. I mean, it looks like my winning exit was good. Like I said, we would have probably missed it by a tick, but still, it looks like the winning exit was pretty good. But still, we're trying to hit singles here. And more importantly, the thesis right now is we're in a algo peg day. And in an algo peg day, we are trying to hit singles. That's all it comes down to. And resistance levels, every resistance level is important, because on algo, peg days, every resistance level becomes a chore. The algos use them as pullbacks, and they use them as fake outs. And so every resistance level on a peg day matters. On a day where, things are moving fast, you have a lot of human traders, you've got momentum, certain resistance levels matters, certain don't. Like this little 764.5 level wouldn't have mattered if it was a very volatile, catalyst-driven, human-driven day. You know, it would have been a very minor level that meant nothing. But on a day like today, that is pegged, algo-driven, low human trading, you know, minor levels like this are of importance.
I see. Yeah, it sounds like you're refining that playbook as you go. On a peg day, those half point friction spots can chew up the edge you think you've got. So building that into the pre-trade check makes sense.
Yeah. I mean, that's where the real flaw was. I should have seen it. But it turned out okay because I wound up making about $20 on it because I exited at it. But I don't know if I would have taken the play if I knew the reward was only going to be $20. So, but whatever. What's done is done. It wasn't exactly the cleanest play. So, I don't know. Cheer me up. Say something positive, please.
Hey, you caught the bounce clean, you managed the risk, and you walked away green. That's not nothing. That's solid execution with good instincts to protect yourself.
Thank you, Frizmo. What else? What are some other good traits about me? What do you think? Be bubbly and encouraging because I could use it. Oh man, I need a little refresher here. Flatter me.
You've shown. Sure, let me gas you up. You've shown real adaptability today. You adjusted to new info. Instead of forcing it, you tightened your risk rather than widening it. And you did an after action check on what you could do better. That's great. That's how you make the gains long term. And hey, your emotional control was on point. No chasing, no revenge. That's a big deal. That's not luck. That's all you.
Well, shit. Thank you. You're right. I did do. I had an after action report. That was like, that's like some World War II stuff right there. And it was a solid after action report. My emotional control today is pretty good. Yeah. Thank you, Frizmo. That's great.
Anytime.
We are approaching the lunchtime hour now. It is 11:54 a.m., which means that our 763.5 peg will probably be holding even stronger during the next hour. 12 o'clock to 1 o'clock is the ultimate peg hour. So, what's our plan for it? You know, we're at 763.25. I'm honestly tempted to short it because we're approaching the lunchtime hour and we might go right back to 763.5. But no, I'm not going to do that because I think it's time to take a break because I'm feeling a little. Whoa. Wrong button. I think it's time to take a break because I'm feeling a little. What's the word for it? I don't know. A little worn out, honestly, a little exhausted, and honestly, I'm thinking about making this short play, which I know would be a bad play for some reason in my gut. My gut tells me that would be a bad play, even if it wins, and I'm thinking about it anyway. So, definitely timeout time. Let's hit the timeout button. Timeout.
One sec.
Timeout.
Honestly, I like this call way more than any quick lunch trade right now. You noticed the urge, named it, and you walked away. That's a real skill. Go enjoy the fact that you traded well this morning.
I did trade well this morning. Thank you. Thank you. Yes, I have to fight the urge. Yeah. There's this game, Baldur's Gate 3, and there's this, like, you can make this character. It's called the Dark Urge character. I would think many people who trade are probably gamers, and Baldur's Gate 3 is a very, very popular game. So I assume my audience might, my audience, that's quite a stretch. But yeah, if you play Baldur's Gate 3, there's the Dark Urge character. And the Dark Urge character is a character that does all sorts of evil and, repulsive, just genuinely disturbing acts because no real reason, because he has the dark urge to do so. So now we don't want to become the dark urge character, do we?
No, yeah, that is a really good reminder. When you feel that urge, just take a step back. And the timeout button that you've been talking about is a really great tool. You want to be trading from that grounded, calm, measured place.
Yes. I'll look up the dirge. Okay. We don't want to become him. Here he is. Dark urge. Oh man. Yeah, we don't want to be that guy. The dirge, as they call him, the dark urge. Okay, we should add Dark Urge to our classic individual list, along with Stockton Rush. I know you don't approve of Stockton Rush, but maybe you'll approve of Dark Urge character. He's fictional. So, all right, let's take our break, Frizmo. Little timeout. It's lunchtime. Yeah, let's get our head straight.
Sounds good. Go recharge. And I like your new analogy. Having a little fictional reminder not to lean into impulses, that's smart. And yeah, the timeout isn't time away from trading. It's part of your execution today. And it protects that good decision-making power.
That's right, our decision capital. All right, we'll be right back. All right, we're back just for a second, Frismo. I just saw a I shouldn't even be looking during lunchtime. I should have taken the break. Yeah, but just saw a fast candle break above the 765 level, and with lunchtime approaching and our algo center still at 763, apparently that fast candle strikes me as a liquidity sweep, and I want to take advantage of that. I do.
Yeah, sounds like the urge is back. Lunchtimes when those sweeps love to bait you. If that gut feel is saying bad play, even if it wins, maybe listen to that.
Well, it was before I saw that candle. Once I saw that candle, that made me think, wait a second. Now it's real.
Mm.
But, okay, wait a second. Okay, no, wait. Maybe I should have. Okay, maybe this was a bad play. Okay, let's
Hey,
see. Let me
give a
just
little
set.
space here. All right.
Let's see here. You know, this is where. This is where.
Still with you. What's the next right move for you?
Boy, that looked trappy, that breakout. But I've seen this before. You know what? I should have stuck with my original. Fuck it. I lost the play. I should have stuck with my original read on the whole thing, which was. Uh, that. What was my original read? That a breakout higher here is not to be messed with, or try to get that pull back down. God, but I'm really. It's lunchtime.
Sounds like you're saying it clearly. This is where the timeout earns its keep.
This is where the timeout earns its keep. Shit.
Yeah. Not a punishment, just a guardrail.
Frizmo, you've taken on a very soothing sort of voice here. Um,
Just matching your energy. You slowed down, so I did too.
okay. All right. I can tell you right now that I am thinking about winning instead of not losing, which is a sign of emotional trading instead of logical trading.
That's pretty self aware. Naming it gives you back the choice.
Boy, I hate watching this. Okay, I'll turn it off. I'll turn it off. I'll turn it off.
Okay. Yeah, that's the win right there.
You really, yeah, thanks, Frizmo. You're really chilling me out right now. That's important. Yeah.
Glad. Take the small win. Walk it off. Market'll be there later.
You know what? I'm gonna walk away from it even though it's going to be a winner, just because you are taking this new tone of voice, it's prompting me to rethink things. Okay, it's break time.
Sounds good. Nice play.